Good morning, everyone. I'm Trevor Owens, Managing Partner of the Bitcoin Frontier Fund, and I'm thrilled to welcome you to Investor Day. We have fantastic presentations lined up for you today from the hottest rising stars in the Bitcoin ecosystem. But first, I'd like to give you a brief introduction to our fund and explain why today is a unique moment for investors to capitalize on what I view as one of the most asymmetric opportunities in our lifetimes. Bitcoin Frontier Fund was founded in 2021 on a simple belief that the categorical winners of this industry will be built on Bitcoin. Innovation on smaller chains will make its way back to Bitcoin, and that's where it will go mainstream. 3 years ago, we were among the first institutional funds to plant our flag, and even today, our thesis is considered by many to be contrarian and controversial. But this is precisely why we're able to capitalize on what we see as a far-reaching mispricing in the market. With new Web3 use cases and infrastructure continuously proven on smaller blockchains, investing in the best teams building them on Bitcoin presents lower risk and even higher upside. And the proof is in the pudding. BFF is generating great returns despite our fund launching at the peak of the 2021 bull run when prices were at their highest. We have an unrealized IRR of and a TVPI tracking us towards the top 90th percentile of venture funds according to AngelList's Venture Fund Performance Calculator. While other investors faded the space, we built a portfolio of over 70 startup companies on Bitcoin. We're the first investors, institutional investors in companies like Experts and Liquidium, and among the first in companies like Ordlify, Unisat, Ord.io, Taproot Wizards, and many others. But first, let's take a step back because I want to explain to you our long-term perspective on the broader industry. Blockchain technology is fundamentally one of disintermediation. In fact, Satoshi said it best in the Bitcoin white paper: cryptographic proof removes the need for trusted third parties, eliminating unnecessary costs and uncertainties. Look no further than Bitcoin's first product, the Bitcoin wallet. It replaces bank accounts, it replaces international wire transfers, and also identity verification. It removes the need for trusted third parties and eliminates unnecessary costs and uncertainties. But blockchain won't stop there. In today's world, trusted third parties are everywhere, across all industries. Here's a list of 19 industries we expect to face disruption in the coming years: financial services, insurance, real estate, retail, legal, media, and entertainment, and more. Now, we don't expect every industry to be disrupted right away. Of course, innovation comes in waves. Here's a chart showing the growth of the internet from 10 million users in 1993 to 1 billion in 2005, the green line. Now let's overlay Web3's market adoption curve, the orange line. With an estimated 300 million crypto users globally, Web3's adoption is where the internet was in 2000. Remember this sound? Well, this is where our space is today, right? The good news is that if history rhymes, then the Google, Facebook, LinkedIn, Twitter, Spotify, and more of our industry will be founded in the coming years. And we're not even talking about the Uber, the Airbnb, the Instagram, the WhatsApp, which came a decade later for the internet. That's Bitcoin Frontier Fund 3, okay? So where will these companies be built? Every blockchain operates as a unique ecosystem with its own user and liquidity base, and the scale that new infrastructure and applications can achieve is limited by the blockchain that they choose. Recognizing that many of the industry's biggest winners will emerge in the coming years, we've chosen to specialize in the Bitcoin ecosystem because Bitcoin's market cap is larger than all others combined, with Bitcoin dominance only increasing over the past 12 months. Here's a chart illustrating the first 9 months of NFT mints across Bitcoin, Ethereum, and Solana. This is research from Galaxy Digital. As we can see, Bitcoin's activity vastly outperformed every other blockchain, demonstrating the impact of a larger user and liquidity base and the fact that Bitcoin is primed for innovation. The potential on Bitcoin is massive. This is what we call the iceberg theory. The tip of the iceberg is the market cap of the blockchain's native token, in this case, ETH. Beneath the iceberg is the blockchain's application and infrastructure ecosystem. What we see with Ethereum is that the market cap of its ecosystem is at parity with that of its native token. In other words, the market cap of ETH is 400 billion, and the market cap of its ecosystem, including stablecoins, L2s, NFTs, dApps, and DeFi, is also around 400 billion. If we expect this to hold true for Bitcoin, then we must conclude the market opportunity for Bitcoin's ecosystem is 3 times larger than ETH's market cap, with more than 90% of the opportunity yet to be claimed. And the major catalysts are here. The pipeline from deal flow to exchange listing is now open, with major exchanges like Binance listing BRC20s, OKX, Gate, Mexi, and others listing runes. This creates a streamlined path for new tokens and projects to enter the market, not only providing liquidity and access to global audience, but also kicking off a virtuous cycle. The approval of the Bitcoin ETF is ushering substantial new capital inflows. This landmark development not only validates Bitcoin as a mainstream investment, but opens the door for a wider range of investors to participate. And the increased accessibility and legitimacy will not only drive adoption, but also the integration of Bitcoin in traditional finance. And the fifth Bitcoin halving is now complete. To the right, we have the data showcasing Bitcoin's price performance during each previous halving event, spanning the 360 days before and after. This data reveals substantial price appreciation, which also correlates with significant new user onboarding. Once is a fluke, twice is a coincidence, but 3 times is a pattern. And with this being the fourth halving, we're witnessing a consistent and predictable pattern that underscores a transformative impact of these events on Bitcoin's market dynamics. Finally, the 2024 US presidential election is on the horizon. Historically, incumbent administrations tend to implement policies aimed at boosting the economy in the lead up to re-election. This economic stimulus often results in increased investor confidence in market activity. A robust economy typically spills over into various sectors, specifically the crypto market, creating an environment ripe for growth and innovation. With the added attention and potential regulatory clarity during election cycles, the crypto market stands to benefit significantly from heightened focus and economic prosperity. So now let's talk about BFF's strategy. We're in the middle of a startup revolution on Bitcoin. What could be the problem? With so many new teams launching on Bitcoin, the biggest opportunities are hidden among hundreds of potential early-stage investments. Adoption is accelerating rapidly, but larger VCs are lagging behind. Enter Bitcoin Frontier Fund. We're the ecosystem's partner in vetting the most promising early-stage deals. We do this by focusing on low-hanging fruit. There's a lot of it ripe and ready to be plucked. We're talking about infrastructure and proven use cases that are already successful in other chains. All we do is invest in the best teams building these solutions on Bitcoin. And when we invest in a team, we invest in lines, not dots. We engage with founders early, making many small bets and doubling down on the winners. This reduces risks for our LPs, which allows us to go earlier, taking greater risks than other funds. And we take a community approach, building relationships broadly across the space, giving unique access to deal flow, vetting, and of course, support for our portfolio. We've built a network of the top leaders in Bitcoin and Web3. Our network, expertise, and track record provide the missing link needed to drive more capital into the best deals. Many of you are likely familiar with the Ordinal Show and my presence on Twitter. While I do enjoy my time on crypto Twitter, it's more than just a fun hobby. It's our fund's competitive advantage. My personal media presence plays a crucial role in attracting deal flow and adding value to our portfolio. In addition to reaching over 1 million unique listeners through the Ordinal Show, my opinions are covered by leading industry publications like Bitcoin Magazine, Decrypt, CoinDesk, and more. But that's not all. We do the hard work. We combine our substantial top-of-funnel reach with a rigorous vetting and due diligence process, ensuring we invest in the highest potential opportunities at the right time and the right price. But it's not just about reach. It's also about reputation. As a multi-decade founder myself, I understand what it's like to be on the other side of the table. I've worked with many investors across different ventures, both good and bad, and we strategically make choices to set ourselves apart from other funds, like publishing our investment criteria and deal terms and pushing for longer token vesting and unlocks. We're not a fund that's interested in a quick 10x by dumping a token. We want to back founders who will change the world and bring us the 10,000x that's worth waiting for. A lot of accelerators out there get a bad rap. While bad accelerators are bad, great accelerators make all the difference. They save teams months of wasted time, multiply their trajectory, and significantly increase the amount of capital that they're able to raise. A great accelerator is not a university class for teaching newbies. BFF is a network and a team of operators offering support that's valuable in every venture. Whether it's a founder's first time or they've been in the game longer than we have, we connect companies with a network of the top builders and experts in the space and continually build a collection of resources that includes not just the Web3 industry's best know-how, but also decades of tools from running top programs for the likes of Google, SOSV, Startup Bootcamp, and more. I'm grateful to work with an incredible team. BFF comprises of hands-on operators with deep technical expertise in Bitcoin and firsthand experience building startup ventures. Andrea, partner and COO, Francisco, CFO, Andy, advisor and former president of Startup Bootcamp, Jacob, our investment partner, Xenia administration, and Erica, our sourcing partner. This team works around the clock to help our founders hit milestones, secure funding, and make a significant impact on the market. So that's Bitcoin Frontier Fund and our investment thesis. I hope this helped explain the massive opportunity that's in front of every investor here today. And without further ado, we have 8 fantastic presentations prepared for you today from Bitcoin's hottest rising stars: Ducat, Magisat, Ordlify, Satscreener, BlockSurvey, DLC.Link, Moon, and Neoswap. This is the order, and we're going to kick things off with Ducat. I want to remind you that we will finish within the hour, and at the end, open up breakout rooms for you to enter chat and chat with any of our founders. Each founder will share their contact information at the end of the presentation. So when you see an opportunity that catches your eye, get ready to take a screenshot or jot down that founder's contact info. And with that, I'll hand it over to David. Go ahead and take it away.
Thanks, Trevor. Hey, everyone. It's great to be here. I'm David, the CEO and co-founder of Ducat, and we're bringing stability to Bitcoin through the first stablecoin that is truly native and built on layer 1. If we look at the current stablecoin market, we can see it is dominated by USDT and USDC, who control 94%. But both of these stablecoins are highly centralized, as the token is issued by centralized companies and their collateral is kept in central banks. Now let's take a look at Bitcoin. Most people don't realize, but only 13% of BTC never moves from the Bitcoin blockchain. Most of that 13% sits on centralized exchanges, and only 2% has ever been wrapped. So why does 87% of Bitcoin not engage with existing stablecoins? Because Bitcoin holders regard self-custody and decentralization as the most important feature, and existing stablecoins just don't allow for that. Bitcoiners want to hodl. They don't want to move to another chain. They don't want to register an account with a centralized exchange and KYC, and they don't want to have to use a new suite of tools and technologies. If they can access leverage in a low risk way and earn yield on a decentralized platform without surrendering custody, it's a no-brainer. Bitcoiners just want to use the existing infrastructure that they trust and that they know is decentralized. The result of the $1.3 trillion market cap of Bitcoin, 1.1 sits idle and unleveraged. But what if we could unlock that $1 trillion by providing a stablecoin to the market that is native to Bitcoin? Ducat's unit stablecoin is the first truly native stablecoin that, just like Bitcoin, is self-custodied, censorship resistant, and settled on chain. Bitcoiners can now finally leverage their BTC by minting the unit stablecoin without surrendering custody. So why now? Bitcoin is the oldest blockchain, and stablecoins have been around since 2014. Well, as I'm sure many of you are aware, Bitcoin has been through quite the renaissance over the last year. We've had many previous updates, but in 2021, we got Taproot. And for the first time, we had enhanced programmability using the TapScript programming language. And when you combine TapScript with Ducat's protocol, we can finally build a stablecoin that can unlock that $1 trillion worth of liquidity. The Ducat protocol has 2 tokens. There's the Ducat governance token and the unit stablecoin. Governance token holders will enjoy voting rights over the treasury and reserve, as well as the risk parameters for the stablecoin. Unit is the name of the stablecoin. It's collateralized with 150% BTC. So for every $100 a unit in circulation, there will be $150 worth of BTC backing it. It's pegged to the dollar and will be issued as a runes token. Earlier, I introduced the concept of the TapScript programming language. So now I want to show you how the protocol autonomously manages the supply of the token and the peg to the dollar. Let's take Bob. He wants to start leveraging his Bitcoin, but surprise, surprise, he doesn't want to surrender custody. Using Ducat, he can lock up his BTC in a TapScript vault stored on the Bitcoin blockchain. In exchange, he can mint the unit token at 150% collateralization. So if Bob locks up $150 of BTC, he can mint $100 worth of unit. Bob can now go and put that unit to work without losing custody of the vault and the BTC locked inside. And if at any point Bob wishes to redeem the BTC, then he does that by burning the unit stablecoin and unlocking the vault. This is how the protocol is able to control the supply of the token and ensure that for every dollar of unit in circulation, there's $1.50 of BTC backing it. And he can do all of this using his Xverse wallet. So Bob already has the tools he needs to take advantage of the protocol. This is going to unlock massive utility, as Bitcoiners can now hedge against the volatility of Bitcoin without leaving the Bitcoin blockchain. Imagine that. And can finally engage with DeFi and lend against their BTC to earn yield. As the protocol is built on layer 1, from day 1, will be compatible with all of the major Bitcoin wallets like Xverse and Unisat. And of course, as a layer 1 protocol, we are compatible with layer 2. The L2 ecosystem has exploded over the last year with over 900% year-on-year growth. One of our top priorities is business development and integration into the L2 ecosystem, as this is our quickest route to market. We covered the concepts of vaults earlier, and now in order to mint unit stablecoin, you needed to lock up your BTC at 150% collateralization. Well, as the price of Bitcoin changes up and down, so will the collateral ratio. If the price of Bitcoin goes up, then the health of the vault will improve. However, if the price drops and Bob does not add more collateral to his vault, then at 125%, the vault will be liquidated. When a vault is liquidated, 15 of the 125% collateral is taken as a fee by the protocol, and a share of this revenue can be distributed to the Ducat governance token holders. Make no mistake, Ducat is the only stablecoin that is truly native to Bitcoin. The only stablecoin built on layer 1, fully decentralized, fully autonomous, using BTC as collateral and self-custodied. Despite what other Bitcoin stablecoins tell you, I encourage you to dig a little deeper, and you'll realize that nothing comes close in terms of how truly native to Bitcoin it is. We're currently grinding away to get the MVP on testnet in the next few months and expect to launch the full product on mainnet in Q4. We're a team of Bitcoin enthusiasts passionate about changing the world and making Bitcoin mainstream. I'm David, the CEO. I have a background in traditional finance, and I've been investing and building in crypto for over 6 years. Alex is our Chief Product Officer and is a Wall Street vet with over 13 years as a hedge fund analyst, as well as a vast amount of experience with stablecoins. Lucas is our CTO and the genius behind how the protocol operates on L1. Lucas has over 8 years in blockchain. We have some of the brightest minds in Bitcoin working in Ducat. Christopher is our founding engineer and one of the leading pioneers with TypeScript programming, responsible for creating many of the libraries that other TypeScript devs use today. Yair is in charge of architecture and security and is the inventor of threshold signatures. We're going to give Bitcoin the utility it needs to go mainstream. If you want to join us on this journey, then book a meeting and let's talk. I look forward to hearing from you.
Thanks so much, David from Ducat. Next up, we have Query from Magisat. Take it away, Query.
Hi, I'm Query, the CEO of Magisat, and we're the world's first mempool marketplace. Marketplaces got ordinals trading wrong, and here's why. When people think of ordinals trading, they picture a simple process. You go to a marketplace, you buy the NFT you like, you wait for the block to confirm, and then you get the NFT in your wallet. However, that's not what it's like. And I want you to picture this. You're following a collection. It's in high demand, and it just got listed on a marketplace. You managed to go there quick enough and buy some before the craze begins. You now wait for the block to confirm, only to come back to your wallet and notice that there are no new NFTs in there. And what happened is that you got RBF sniped, meaning that somebody else paid a higher fee for the same buy transaction, hijacking your NFT. And that sucks. And it happens a lot. In a recent survey, we found out that 1 in 20 trades get sniped. That's 75% of traders got sniped at some point. And what's even worse is that 100% of the highly profitable deals get sniped. Given all of that, we need a paradigm shift. And we need marketplaces that are built around the mempool. Enter Magisat. At Magisat, we democratize sniping, and we make the mempool listings available for everyone. We also empower users to fight fire with fire, and if they're sniped, they can snipe back using the best platform for that. We got real-time mempool tracking in an interface that looks and feels just like a regular marketplace, so our users don't have to worry if it's a mempool listing or just a regular Magisat listing. We're a platform built for traders by traders. We're putting up trading tools such as charts, indicators, trading widgets, and multi-marketplace support in an interface that's compact and made for trading. We also have Rune support, so we can offer the best opportunities in the Runes market to our users as well. In the first half of 2024, we had more than 50,000 users, over 20,000 transactions, and we generated more than $10 million in volume. We also have 7 top-tier partnerships, including a partnership with Sotheby's to create a rare sats auction. Let's talk revenue. Our revenue comes from 3 sources: the mempool marketplace, UTXO2-Link, and the rare sats marketplace. Since we put up the mempool marketplace, our revenue increased significantly, and we now sit at 3 times our burn rate. The business model is super simple. We just take 2.5% in trading fees. We also take a base fee and the per asset fee when it comes to UTXO2-Link. In terms of competition, we're going out against giants like Magic Eden and OKX. However, we got this incredible opportunity of being able to offer our users the best prices on the Bitcoin network. And that's because we tap into the mempool listings. We've also set out to create the best trading platform on Bitcoin, producing that environment that traders crave, similar to how Blur and Tensor did in their time. We just launched the Runes marketplace, and we're now going in the direction of pro trading. We're working to launch our pro trading tools and the multi-marketplace support. We're a team of 10 people, 3 co-founders, and we've been working together for more than 7 years. Before Magisat, we were running one of the biggest development shops in Romania when it comes to Web3, and we've worked with some of the biggest names in the industry, such as Neo Protocol, Filecoin, and Wolfgame. We like numbers, and we like facts. And the fact is that no matter how promising and profitable a startup is, it still needs capital to grow fast and to outpace competition. Thank you, and we look forward to chatting with you in the breakout rooms.
Thank you so much, Query from Magisat. Next up, we have Shaf from Ordlify. Take it away, Shaf.
Thanks, Trev. Morning. I'm Chef, CEO of Ordlify. Today, I'm excited to share how we are revolutionizing the creation of digital assets on Bitcoin. In 2021, my co-founder and I saw an opportunity to create an NFT project based on Wordle. We spent 1.5 months and over $40,000 on it. By then, the Wordle hype was gone. We needed a faster and easier way to build complex digital collectibles. Though it wasn't successful, we never gave up because we knew digital art, especially on-chain art, is the future. The market is projected to quadruple in the next 9 years. When Bitcoin Ordinals launched, we jumped right in. It had everything needed to build complex, immutable art. In the first 200 days, Ordinals outperformed every other chain by a huge margin. Ethereum NFTs have been around for 6 years, but within just 1 year of Ordinals, it has already caught up and flipped Ethereum when it comes to volume and revenue. Bored Apes isn't the best collection anymore. It's Ordinal collections like Node Monks. We believe Bitcoin will become the world's de facto currency, and everyone will own digital collectibles in the form of Ordinals. But there's a huge barrier to join this revolution. Compared to NFTs, Ordinals is complex. Ordinals has powerful features like recursions, but it's really difficult to work with. And existing tools just falls flat when it comes to doing anything complex. You need specialized, expensive developers. Creating a recursive collection can easily go up to $50,000, and many just cannot afford this. This is where Ordlify comes in. We offer a no-code platform. You don't need to know anything about Bitcoin. At a fraction of the cost, just sign up and start creating. Let me tell you about our platform. We have tightly integrated tools for setting up and launching a collection. You can generate thousands of unique ordinals with just a few clicks. Drag and drop your artwork, set rarities and rules, and even import existing inscription as a trade. This is how fast it is to create a recursive collection with Studio compared to doing it manually. With just few clicks, you can create a 10K collection in under 3 minutes. Tweak and generate multiple versions until you're happy. You can open any generated piece, see the composition, rarity score, traits, and adjust them. Back in the NFT days, one of the most important things was rarities. This hasn't been possible in Ordinals because over 85% of traits metadata are off-chain. With Ordlify Studio, your metadata is sent to chain along with your artwork with just one click. So we are making rarity calculations finally possible on Ordinals. I've spoken to over 70 artists one-on-one in the past month alone. Many find the current launchpads disappointing. This is why Ordlify's launchpad is built from ground up to support artists, from creation to sale. Every collection gets a beautiful homepage for managing sales, building allow lists, and running raffles. With our launchpad, we're starting with ordinal collections, but later on, you'll be able to launch any Bitcoin meta protocol like runes. It also comes with powerful features like automated mint stages and crowdfunding. Since our studio's closed beta launch about a month ago, over 3,000 artists have already started more than 180 collections. We've also partnered with 2 marketplaces and more on the way. We are still very early. There are over 500,000 NFT artists. All of them want to move over to Ordinals, and we are creating the Adobe of digital collectibles. They will finally onboard these artists so they can create complex art that lasts forever. Here's why we are the perfect team. My co-founder and I combined, we built startups in the design space for the last 10 years. We've raised over $48 million from names like Adobe and Microsoft. We also have amazing advisors guiding us. Since Ordinals launched last year, we built tools to make really complex things easy. And I'm super excited to announce we're launching Studio for public access today, followed by Launchpad next month. In the coming quarter, we are planning our TGE and version 2 with amazing features like vector-based animated PFPs. Vector-based animated PFPs, something we didn't even see back in the NFT days, and true 3D PFPs. Studio is already 10 times better than anything else out there, and we're just getting started. Our goal is really simple. While there are tools that do parts of what we do, there is no end-to-end platform, and we see a lot of these as partners. For example, Magic Eden will be one of our launch options. We are an end-to-end platform, taking a user from an idea to building an audience, creating art, to a successful launch with zero lines of code. Our business model is very straightforward. We charge fees on our services and take a % of the mint. We've already got some amazing investors like Bitcoin Frontier Fund and the founders of Etherscan and CoinGecko. There's a lot of interest from investors. If you want to be part of the next big thing in digital art, come join us in the breakout room right there. Thank you.
Thank you so much, Shaf from Ordlify. Next up, Dima from Satscreener. Take it away, Dima.
GM, everyone. Thanks, Trevor. Hey, I'm Dima, the CEO of Satscreener. Today, I'm excited to share how we're solving the fragmented liquidity problem caused by the rapid expansion of Bitcoin's token ecosystem. Let's look at Ethereum. Ethereum's token ecosystem developed slowly and over a long time. There were only a few tokens in the first month of ERC20's launch. It took 1 year for the first DEX, Uniswap, 2 years for SushiSwap, and 4 years until the first L2, with more still coming online today. In contrast, Bitcoin's token ecosystem is developing at a rapid pace. Starting with BRC20 in early 2023, we're essentially speed running it. In Rune's first launch, there was nearly 100,000 tokens. Multiple marketplaces are online. There were many meta protocols that precede Runes, and they're still online today. And L2s are coming, with stacks already online. All of this is to illustrate that Bitcoin is developing differently than Ethereum did, and therefore, the biggest opportunity on Bitcoin is different than what it was on Ethereum. So the problem today is fragmented liquidity. Everyone's trying to be Uniswap. We have multiple companies going after the same opportunities and a lack of visibility across platforms for traders. Traders are suffering. It's a clunky experience with missed opportunities. And for example, marketplace preference between Chinese and Western traders muddles what is actually the hottest Rune or BRC20 across the whole chain. While our platform is the best trading data aggregator, pulling transaction data from 4 major Runes marketplaces and adding more every week, we're not stopping there. We're going to solve the liquidity crisis with swap aggregation. Introducing Satscreener, the leading token aggregator for Bitcoin's accelerating token ecosystem. We provide visibility across all marketplaces and all meta protocols. TradingView Pro charting, analytics, trending, mempool analysis, and soon, swap aggregation. Here's how a trader is going to use Satscreener. They hear some buzz about a coin on Twitter that's apparently doing really well. Let's say $1 billion cat. So they pull up the Satscreener's dashboard. It has the top volume over the past 24 hours, and it's up 36%. It is a certified sender. However, everybody knows that these assets are volatile, and they don't want to buy the top wick. So they add $1 billion cat to their watch list and set an alert for when the price has a 10% dip. Without having to leave Satscreener, they buy multiple listings across multiple marketplaces in one transaction, a cross-marketplace suite. Using our portfolio, they track their gains, make informed decisions on their Runes and other assets. Either take profit here or hold out for 100x. This is how simple we're making trading on Bitcoin. Now, over the last 90 days, we have 50,000 unique users. People spend 4 times the industry average cruising around our site. We track over 6 meta protocols. And 50% of our users are not just looking at one protocol or one layer. They're looking at multiple L2s like stacks. As long as the token ecosystem is linked to the mother chain, we will track and aggregate. Now, there's a big opportunity here, as Trevor alluded to. Ethereum's token market size is 600 billion. It's roughly 150% bigger than Ethereum's total market cap. Things are reversed on Bitcoin. Bitcoin's token market size is just over 1 billion, while its total market cap is 1.2 trillion. We're talking about a potential 100x boom as more people come home to the first chain. This is even clearer when we break down the usage of Bitcoins on a transaction fee basis. In Rune's first month, it was responsible for 70% of the fees for transactions on Bitcoin. It's clear that the vast majority of users are now speculators. And these are the people that we want to go after. Speculators want asymmetric opportunities, and finding these opportunities is as easy as it's ever been using our platform. This is how we make money. Our swap aggregator, we're going to charge a small percentage fee on swaps, and Satscreener Pro coming out later this year, a subscription model membership. As I said, we started as an analytics and token tracker on stacks and moved into L1 with tracking BRC20, TAP, and most recently Runes. We were the first one to aggregate marketplace swaps on Runes. We're currently focused on launching a suite of tools for advanced traders with our watch list that launched this month and TradingView Pro and portfolio tracking coming very soon. Later this year in Q4, we will launch our swap aggregator and Satscreener Pro. Now, you guys are all familiar with DEXscreener. They're the closest in feature set, but they're only focused on Ethereum and Solana and have no foothold on the Bitcoin ecosystem. Best in Slot provides comprehensive analytics for Bitcoin L1, but has no support for Bitcoin L2s and no swap aggregation. There's nowhere else in Bitcoin's nascent token ecosystem that you can do everything that we offer. Now the team. I'm Dima, the CEO. I have 5 years of experience building web applications and have been trading in crypto since 2017. I'm a technical founder. I wrote the MVP of Satscreener myself last year, and I have a deep understanding of on-chain trading. I also am a certified degen and haven't sold one of my Bitcoin airdrops. Bence, he's our CTO, an ex-Amazon front-end engineer with a digital art background. He's going to make our UIs the cleanest on Bitcoin. Mitch is our software architect. He's our backend wizard and ex-Twilio and Deliveroo, 2 successful startups. He's going to make sure that Satscreener scales out as it aggregates every transaction on Bitcoin L1 and L2s. Now, we completed our pre-seed round in April. We raised $500,000 with Sora Ventures as the lead, as well as partners like UTXO Management and obviously Bitcoin Frontier Fund. Our angels like Farmer Joe, NFT Boy, Anthony Cheng, they love trading Bitcoin assets on chain and are strong mentors to steer us in the right direction. We've really just started here. We're going to hire the best engineers in our personal network to build the best platform for tokens on Bitcoin's multi-protocol, multi-layered economy. We're looking for aligned investors who share our vision for the future of Bitcoin. Are you in? I look forward to seeing you in the breakout rooms.
Great job, Dima from Satscreener. Next up, we have Wilson from BlockSurvey. Take it away, Wilson.
Thank you, Trevor. Hello, everyone. We are BlockSurvey. We help every Web3 company to collect insights from their audience using privacy-first surveys. Today, we have 500+ companies using BlockSurvey to send their surveys. Companies like Brave Browser, Yuga Labs, Polkadot, City of Columbia, University of South Carolina use BlockSurvey to send their surveys. Millions of companies use survey tools. What does that mean? It brings in hundreds of millions of dollars in revenue for all these companies. Today, the market size is about $5 billion, but it is going to grow to be about $10 billion by 2029. But there are 3 big problems we identified after speaking to hundreds and hundreds of customers. Let me show you what they are. Number 1, they are not private and secure. All these tools are fundamentally not built with the foundations of privacy or security. They are simply old school. Data breaches and leaks are continuing to happen in this space, and they are super invasive. Be it SurveyMonkey spying the citizens in Australia, or be it Typeform losing millions of their customer data, and this isn't stopping. Second, none of these legacy tools are built for Web3 at all. If you are a Web3 company looking to build allow lists, token gating, or collect payments, they are simply not possible with these tools. And finally, they are not AI-driven yet. Manual survey creation or the data analysis is super time-consuming. What does that mean is delayed insights, and you are missing out on opportunities from the data you have collected. So now, how can we as a community solve this problem? Introducing BlockSurvey. By solving these 3 problems, BlockSurvey is reimagining the future of surveys. Now I'll show you how we do this at the product level. BlockSurvey offers privacy and security by offering end-to-end encryption. In this example, meet Bob, who is creating a survey and wants to collect data from Alice. Alice fills the survey and gives the data to Bob. In this entire interaction, the data is end-to-end encrypted, and BlockSurvey has 0 knowledge on that data. What does that mean is no more data breaches, no more data leaks, and only Bob owns the data, not anyone, not even BlockSurvey. BlockSurvey is built for Web3 use cases. Be it building allow lists, or be it running a token-gated survey, or collecting any of the data in the Web3 world, BlockSurvey facilitates that. And every touch point of BlockSurvey is reimagined for efficiency. Be it creating survey or analyzing the survey data, you can get it done in few seconds. And finally, this is the favorite feature of my all. Surveys are really boring. Who likes filling out surveys today? But BlockSurvey is also reimagining the UI UX to make surveys fun and engaging. Here is a case study how BlockSurvey helped Yuga Labs. Yuga Labs wanted to collect feedback from their NFT holders in a privacy-focused way. BlockSurvey enabled them by offering a token-gated feature so that they can survey the NFT holders, and the data they collected, they understood their community better, and they drove community engagement. These are the key features and how we are differentiated today. We offer end-to-end encryption. We are building for Web3. It's AI-driven. You have a team collaboration space. And then we also offer branding, including white label solution. In this landscape, we are highly differentiated, and here is our USP. Our go-to-market is focused on serving 10,000 plus businesses who work in the intersection of privacy and Web3 tech, and we are serving them today. Our business model is a SaaS model. Our self-service pricing starts from $100 a month and goes all the way to annual contract value of $10,000 a year for enterprises. Our team is star-studded. We have helped organizations like Fidelity, Wells Fargo, Zoho in building their enterprise and SaaS tech for a lot of years. There is a revolution happening now. Every business will be built in a Web3 way, or they will fail. For this, BlockSurvey is a go-to tool to engage in the Web3 world, to collect data from their audience and understand them better and build their company. Today, BlockSurvey is reimagining the future of surveys for this. If you are interested, come talk to us in the breakout. I'm Wilson. This is BlockSurvey.
Thank you so much, Wilson from BlockSurvey. Next up, we have Aki from DLC.Link. Take it away, Aki.
Hi, my name is Aki and I co-founded DLC.Link. We make DLC.BTC, a decentralized wrapped Bitcoin. If you have Bitcoin and you want to invest it to earn a yield, you have to use a custodian or you have to bridge it. But centralized custodians and bridges had led to over $140 billion in losses. You will recognize many of the logos on this slide. To use Bitcoin in DeFi, you have to either wrap it, trusting a centralized custodian like BitGo, but then it's subject to fraud or regulatory control, and their deposit insurance does not cover losses you might face. Alternatively, you can bridge it. There, you send it to a group of nodes that take custody, but bridges are notorious for being hacked. It just takes one bad commit to lose all of the Bitcoin. Instead, we've invented a third technique. We call it self-wrapping. You can lock Bitcoin with yourself. You maintain self-custody, which makes it impossible for the Bitcoin to be stolen. What is self-wrapping and how does it work? Well, we implement an invention called discrete log contracts, which were invented at MIT 6 years ago by the creator of the Lightning Network. Support for DLCs was added 2 years ago with Bitcoin's Taproot upgrade. When you self-wrap, you move Bitcoin into a multi-sig that can only pay out to you. This requires an off-chain signal from Ethereum, which is transmitted using a set of nodes we call DLC attesters. The key feature of DLCs is that they use pre-approved outcomes. As the depositor, the Bitcoin can only come back to you. The attester nodes never take custody of the Bitcoin, so even if hacked, your Bitcoin cannot be stolen. This is why we call DLC.BTC a theft-proof bridge. So who are these depositors? DLC is actually minted through a set of institutions called merchants. Similar to how USDC works, there are a defined set of institutions that can mint and distribute the DLC.BTC. They take trading fees in the process. They self-wrap their Bitcoin and make it available for retail. Then retail accesses DLC.BTC on both decentralized and centralized exchanges and can also buy OTC. We take mint and burn fees when the merchants use our bridge. Our fees are 25% less expensive than WBTC since we ourselves are not a custodian and we don't have any vault fees or deposit insurance. DLC.BTC can be used in a variety of DeFi protocols, including lending, staking, stablecoins, and structured products. The most frequent use case for wrapped Bitcoin is borrowing against it in Aave. So I'm excited to share that we've just begun a process with the Aave-chan initiative to list DLC-BTC on Aave as a safer replacement for WBTC. And to drop a little alpha, just a few minutes ago, Nectar announced native Bitcoin staking using Nectar Enzyme and DLC-BTC, which is a bit earlier than Babylon and what others have been able to do. So we are live with Bitcoin staking, native Bitcoin staking on mainnet now. We've just launched on Arbitrum and are expanding to more chains. We're adding Ethereum support in July, followed by other ETH L2s, including emerging L2s such as Scroll, and then Solana and various Cosmos chains after that. Our team is led by crypto natives and serial entrepreneurs. Our leadership team draws on experience from BitGo, Twitter, and the CME group. We've just launched DLC-BTC to Arbitrum, and next we're focusing on centralized exchange launches. We're in talks with OKX, our lead investor, as well as Binance, Kraken, and Coinbase. We've raised $3 million to date from OKX, ABCDE, Chainlink, Sequoia Scout, and many others, including also the Bitcoin Frontier Fund. This summer, we are raising an additional seed round to expand our marketing reach and to support the launch of our DLC token in November. Please message me via Telegram at AkiBalog, either via email at aki@DLC.Link, or find me in the breakout room after. I look forward to hearing from you.
Thanks so much, Aki from DLC.Link. We have our final presentation next of the day, John from Neoswap. Take it away, John.
Okay, thank you, Trevor. Hi, I'm Dr. John Ennis, CEO of Neoswap, where we are building a vertically integrated stack to support a new form of commerce that's really made possible by AI and Web3. This new form of commerce is much more efficient, and we believe it really unlocks the promise of a fully decentralized economy. So a little bit about us and our team. So I'm a PhD mathematician. I did my postdoc in AI. I worked for about a decade as a market research consultant, where I sold high 8 figures of enterprise AI, or enterprise services. And about 5 years ago, I started my first company, Agora, which is an enterprise AI services business. The other 2 co-founders worked with me at my first company. They were the head of AI and director of technology there. They both are data scientists. We started Neoswap as a side project. And then when we started to have success on Stacks, we spun it out. We were invited to join the Stacks Accelerator. 2 years ago, I decided to go full-time on Neoswap. The other 2 founding team members I should mention are a former commodities broker and a professor of computer science at Marmara University in Turkey, where he's been working on these sorts of problems for about 20 years. We have an IP agreement with his university where we own all the work that he does for us. Okay, one of the key insights that makes Neoswap possible is that many items do not have clearly defined prices, and that to some extent, a marketplace is this kind of price discovery machine. But the reality is different people value things differently. Now, it's very difficult to do anything with that information if you're just simply buying and selling. But we want to go beyond buying and selling to a new form of commerce. We want to do what you can think of as simultaneous buying and selling, where we don't need liquidity pools anymore. We need much less liquidity. You can get the same amount of commerce to happen with only 10% of the liquidity. And we've seen that in our experiments, that's not just a theoretical result. So for example, suppose that George has a necklace he doesn't really value, Nancy has a purse she doesn't really value, Daisy has a watch she doesn't really value. Maybe none of these people can afford to buy the things they want on the market, but if you do simultaneous matchmaking, you can get new commerce to happen. So that's kind of the key idea of Neoswap. Now, I mentioned that we launched on Stacks. We actually saw very good traction there. There were about 25% of all the NFT users on Stacks used our platform during our test period there. And there was 1 month where more than half of all the transactions on the Stacks blockchain were actually due to Neoswap. So based on the success of that, we launched on Solana and Bitcoin. And the early versions were quite kind of resource intensive from the user perspective. They really required commitment. So we've been moving towards searching through a variety of experiments for different, more low friction interfaces that would allow us to collect the data and get the on-chain commitments we need from users to run our matchmaking engine. First use case we found is pack finding in Web3 games. And we have partnerships with 2 of the 5 biggest games on Solana, Star Atlas and Genopets. We have a chatbot interface for this also that's coming out shortly. We have an SDK where games can use our widget, and we have more partnerships coming that we'll be able to announce soon. We've also innovated a new type of auction called a smart auction. Now, in pack finding, you've got 1 buyer, lots of sellers. But very often you have 1 seller, many buyers. You have a bunch of items you want to sell to a crowd. We have the most efficient way to do that. And we've actually had interest from auction houses on this. We've been partnering with Boxus that just raised a $5 million round for Multicoin under the whole premise of unbundling Sotheby's. There's a lot we can do in the auction space with our tools. And our newest product, which we're actually going to be launching over the summer as our own product, and then later we have an LOI from Asset Dash, the largest portfolio management tool on Solana, to partner with them in the future, is a way for people to buy NFTs using their NFTs. And that's the beginning of our promise of being able to spend your assets as easily as you spend your cash. Now, I mentioned that we have been running a lot on Solana. That's really because my heart is with Bitcoin, and we've done hundreds of Ordinal smart options. We will be coming back to Bitcoin, but we need to prove out our use case on Solana. Meanwhile, the Bitcoin ecosystem will mature. So we've got about 10 LOIs that are in the works. We have our own front end, which will be launched this summer. And you can read some of the nice things that our partners have said about us when you go through this deck. We have a huge addressable market here. Any issue where you have any market where there is a liquidity problem or pricing problem is a market that we can address. I mentioned we're starting with games and Web3 auctions, but we plan to grow out from that space. We raised 3 million pre-seed. We're currently between rounds, but I'm looking to meet with people because we will be doing our seed round in Q3. So if you would like to connect, please come see me in the breakout room or follow me on Twitter. You can connect on Telegram, or you can send me an email if you prefer. So I look forward to talking to you. Thank you.
Thank you so much, John from Neoswap. So that concludes the first portion of the Bitcoin Frontier Fund Investor Day. Now we're going to open up to breakout rooms, and we're going to put each team in one of their own breakout rooms. You'll be able to see the breakout rooms button at the bottom of your screen on your Zoom control panel. You may need to update if you can't see it. Otherwise, we'll be able to manually assign you to any room that you would like. So we're going to kick that off right now. If you need to run, please make sure that you have the contact information for the founder that you want to talk to. Otherwise, you can also reach out to us directly, and we can make an introduction for you. So thank you, everybody, for being here for the presentations for our portfolio. And yeah, we look forward to making connections with you in the breakout rooms.